Hello traders, how are you? Happy Sunday, Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex Outlook and the forecast for the week starting of 30th of September to the 5th of October. So first of all, before we begin, thank you very much for your time watching this video. I hope my ideas help your trading during the week. If you enjoyed the video, please show your support back. Hit the like button below the video and leave some feedback on the comment section. Your support, my personal motivation. It's a very simple motto. I do that only for you. I invite you to join our totally free new community channel in a Telegram application. The link to join is right below in the description. I also drop it in the comments for you, so it's easy for you. The idea of the channel is me and my team share some trading ideas during the week for you. So you can always have the follow-up of interesting ideas during the week. Articles, video, everything is totally free, of course. So the link to join is right below. It's for the whole community. Last thing before we start, on Monday I will, as every week, I will publish the weekly Outlook PDF format. So just come back to the video, and below in the description and also in the comments you will find a link for the PDF. Okay, that will happen on Monday. Or just follow up with the email and of the newsletter, of course. I will be sending that as well. So, sorry. So let's begin. Previous week we saw the Fed hiking the rate once again. New Zealand keeping the rates. The biggest question is how that will affect from here on. The bottom line is dollar continue its trends against the others. Will that be the case for this week or a few next weeks? You know, it's very short term. And to be more specific, this is non-farm payrolls with the coming week. I think there is a good chance that this week would be a bit more relaxed, at least the beginning of it, than we are used to in September. We are used to a very big volatility during this month so far. There is a good chance it will be more relaxed. But there are still great opportunities on some of the pairs. It's not about the quantity, it's about the quality. It's enough to have one or two good setups for the week to make the profit of the week, rather than split our risk for 20 pairs, right? It doesn't always the case. It's not always the case. So let's begin. As always, we go over the PDF from the previous week, which is here. And we are following up our trading ideas and setups and see what is still relevant, what worked, what failed, and what became irrelevant. So basically, always a follow-up. So let's begin. The euro dollar, our plan was to look for rally and for sell on the short term. And we wanted to see it happens from this area or slightly higher. We were after the sell idea, right? So this is the place for us. New high, lows, and then sell the rallies. And basically, this is what we got: a new high, lows, and sell the rallies on the creation. The question is what's from here. So the weekly cycle still remains under bullish pressure, because as long as this low holds, we are in a corrective mode basically, or a possible continuation further. That's the bottom line. We have this triple push, two waves correction, easily further continuation. However, we might get it also extended a bit, so that would be like leg number 1, 2, one more low, and then continuation. So remembering that, we need to go to daily and find how we put the daily inside the weekly. And the daily currently, what happened is that if we got this special, which basically it's a double idea from the weekly, then the daily made its rally here, right? And now it's breaking down. There is no bullish divergence supporting the buys on the euro dollar currently. Therefore, for the short term, short term means on the coming week, maybe few weeks, right? But the idea is, as long as the daily and the 4-hour chart are not fitting in the weekly cycle again, then we cannot trade the long term, we can trade the short term. And the short term is currently the combo for daily and 4-hour chart. They both currently under bearish pressure. And therefore, the plan for this week is to look for some sell setups continuation. We might get some pullbacks, right? But we will want to see the euro dollar approaching to lower levels. Now, we might get it facing some kind of a range here, right? But our plan for, at least for the beginning of the week, is sell the rallies. And the invalidation for that would be this plan. Good levels to watch for sells. Of course, we can drop the Fibos as well, right? We have one area right here. So if we break through this zone, this would become here. This would become a massive area for a possible sell-off. And if we break through this zone that we have, the next critical area of fighting, it's also in the 50% Fibos, then right here, right? So sell the rallies is a good plan for the coming week, most likely with invalidation of the last top. Our next pair on the list is the euro versus the pound. We were after sell. Now the whole idea was to get a second leg here. That would be an ideal setup, right? 1, 2. We never got it yet. It was a pretty much straight move to the downside with the bearish hidden divergence. Right now we can see some stop edge signs on a continuing divergence happening on the bottom of the rally and a bullish hidden divergence happening from here. Short-term rallies are acceptable for the long term as long as we are below here. We would want to go and sell these rallies. So our plan for the euro versus the pound: rallies, look for sell evidences, and for the next further sell. We do have this important zone. It was a break zone, right? So it definitely is expected to be like a top area. We do have this area like creating a channel for us. So every rally inside the barriers that the pair has would be considered as a zone to look for sell rallies. Now, what kind of rallies do we have as best opportunities? What kind of sell the rallies we have as the best structures for the setup? False break. So we have a rally, then a false break, like a fake breakout. For example, a rally, then a fake breakout. That's a great sign for continuation. If we push in two waves and we have a trend line between these two waves, break of the trend line is also considered to be a very good setup. Bearish divergence to be developed in the sell direction would be a great setup as well. Okay, so we were looking for the bearish evidences there. The next one on the list is basically the euro pair, also euro pair, but it's the EURCAD this time. We wanted to see a rally, pretty much for the previous tops right here, right, to the same zone. Where is that? Here, EURCAD. So we got the rally as we wanted, pretty much to the same top, and now look what happens. Daily becomes to be a double top, bearish divergence, and break of the trend line. So the rally for the previous week stopped right on the top, pretty much as we wanted to see happening right here. That was our zone, right? And we are, well, now we are in a sell. Why? Because the long term, sorry, let me just open that. The long term is still bearish for us. That's the triple cycle we are selling, and the weekly also suggests further continuation. We got these two waves. We got the correction on the daily chart, and the weekly suggests for further continuation of the second leg by holding the structure of lower highs, lower lows. Very simple. We never managed to get any new higher, right? We keep the structure of lower highs, lower lows. Daily supports the sell. Therefore, the EURCAD is in the bearish mode. So for us, we are after sells straight or sell the rallies, definitely definitely bearish scenarios for the pair. How far can that go? Well, I would suggest first of all the previous low, so around the 149 area and lower down to 148, definitely possibility. But also we will need to pay attention to the cycle levels, because if we are going to the next zone, the next zone is much lower. That's 146 and probably 144. So the EURCAD, we are bearish as long as the structure of the lower highs holds. This is our invalidation zone. Next one on the list was the New Zealand Canadian. Now our plan was to get one more rally. Let's put the New Zealand CAD on the chart here. Okay, so that was our plan right here. We wanted to see one more rally. We got one more rally happen, and it was blocked by the trend line and the resistance area with a bearish divergence. The biggest question is what's now, because the weekly cycle was basically bullish. We got the two waves, we got a bullish divergence, it ticked well, and we get an engulfing, right? And the whole idea was it's bullish as long as the last low holds. But we have already suspicious signs, and these signs are that after triple cycle we want to see structure of two waves and breakout for continuation. We never managed to get it, and it's a one straight move through all the Fibonacci retraces, and it's right here, and it's on this zone, Fibonacci retraces, right? We managed to, my knee is scratching, sorry, and we got a break through all the levels. It's a very, very serious suspicious sign that there is a good chance we are continuing lower. Now I just want to remind you why it's bearish for the long term, because all the buy idea was for short term. We wanted to go sell for the longer run, and we might still do that. And the reason is that weekly triple cycle. We had this triple cycle, 1, 2, 3, and we are building up here a possible range as well. So we might get it going all the way down towards 080 or 082 or so, right? So as for now, the bearish pressure might continue. We might see the pair pushing slightly lower, maybe even making a new low here easily, right? Then we would be looking for another low, false break, and start looking for the buys. But as for now, by going through all the level, the structure of lower lows, lower highs remains. The pair goes through the Fibonacci retraces levels. Definitely a bearish scenario. So New Zealand and CAD is back to the bearish pressure, sell the rallies. We don't need really to wait for the lows to be broken here, because one straight leg went through all the Fibonacci retraces. It's a warning sign by itself. Why would we fight a market, right? So our short-term plan that we had in the previous week worked pretty beautifully, and that's all. Aussie franc, we wanted to see one more high to be reached, Aussie franc, and we are there, and it's forming. So basically, so far so good. Now the question is, where do we go from there, right? In order to be able to answer this question, we take a look on the daily chart. That's our zones, right, that we are following. Now this is the daily, and this is the last leg here. So the first critical zone was reached, pretty much cleared. The next critical area is around 07130, and the magnet zone is around the 072. Definitely I think this will be reached, the first or the second zone, where from we should mark this trend line, and once we break below that, so let's drop that, and once we get the break below that, I think it's time to start looking again for sell the rallies. So the short term can push it higher to the previous desired levels, break below the trend line, and we should be looking for sells again. Pound kiwi, our goal was sell the rallies. This is the pound kiwi, we got the rally, we're getting the sell. From my point of view, the structure now starts to be kind of lower lows, lower highs. So the way it looks right now, the pair is in a corrective cycle. I would expect two waves on a daily chart. Therefore, pound kiwi from my point of view is still bearish. There is nothing against us on the 4-hour chart and daily, so we can go all the way from here or slightly rallying before. Invalidation for the sell zone is right here. So this is the pound versus the kiwi, was and remains bearish. Pound Aussie, we were waiting for bounces, right, from the 100 level or 161.8, and it happened to be from the 100 area right here. Expansion right here. So it happened to be right from the 100 area. We reached the rally. Now the question is, we saw the rally, sorry, and after the rally we reached basically the previous the targets of that rally. Two waves, 38 target taken, reached, game over. The question is, what's next? The next thing is, to me, uncertain, and I would simply avoid trading this pair. It's neutral for me. There is a good chance we are going bearish here, and I think that's what I would be looking to trade pretty much. This triple cycle on a daily should offer 50%. Problem I have with this cycle, there is no ending divergence, so it's kind of much more like a 4-hour chart rather than a daily. So this is the area where I think we are going down to here or here. Kind of tricky, very short term. The best, I think, is to avoid this pair, look for the other concentration. But if you really want to trade that, then it's, from my point of view, it's bearish, as long as the structure of the lower highs, lower lows holds. That's pretty much what we have here. Next one, New Zealand dollar. Our plan was buy retraces. We got the retraces. However, we never managed to create a daily high. That was the best plan, right? To get a new high, drop, and buys. We never managed to get this high, and this is a suspicious sign by itself. That might continue all the way down. Now, it's really not clear here. The weekly cycle is double. The daily cycle is a triple cycle down. Definitely possible two-wave correction or at least move inside the range. So from my point of view, it's only for short-term trading, and inside this box, I would be looking for possible buy setups. So I want to see the drops to take the buy trade. The way I see that, we are building up here something like that before a possible rally. This is a very critical zone. That's how I see that. I might be wrong, but I would be looking for dips and buys. Euro versus the OZ, one of the options was and remains a possible break of the weekly range for new highs. But on the short term, we wanted to see two waves, to deep wave correction to the downside. That was our plan for the previous week. And so far, it followed exactly what we wanted to see. We got the next leg that we were waiting to see. The biggest question, what's next? The weekly was a bullish divergence. Daily becomes now, well, it's building up, right? The second wave correction. Very tricky scenario. The daily still offers 38.2 as a possible target, maybe even slightly lower. 4-hour chart starts to show some signs against. So it's easily could be the reverse for the upside. Not clear. Not clear. Previous week was clearer. This week, I suspect we are going to be blocked here. So something like that, and I suspect some kind of rallies here. Short term might continue lower, but I would be very careful. The bottom line, if we get a new low on the magnet zones, I would be looking for possible buy dips there with bullish evidences. So we do have the structure is building up, right? If we manage to get there, that could be a very good bounce opportunity. Nothing clear for the long term yet, so short term trading, that's the way I see that. From my point of view, not the hottest and the best opportunity. Euro Kiwi, we wanted to see the sell the rallies as well. Let's put it here, Euro Kiwi. So we got the low that we wanted. Again, the question is what's next. Currently, what's happening that the euro last divergence on the weekly is still bearish. Daily should be the corrective cycle. Daily is now forming the two waves, and the 4-hour chart has to fit in. So I once again, like the EURUSD, I would expect this rally, but once the 4-hour also becomes a bullish divergence, that should be a place for the rallies. Pretty much straight to the point. Short term, we still expect lows. Once the lows created with the bullish retraces, I would be switching the ideas for buys. Next one on the list was the pound versus the yen. We were after sells down to 38.2. Now, for the long term, the plan for this pair is still, for the longer term, the plan for this pair is still bullish. We got two waves. After two waves, there are two possible ways of correction. 1, 2. That's why we are after we were after 38. And the other option is a range. And this is pretty much what's happening right now. So from my point of view, the previous week plan was sell the rallies, aiming 38.2. We got the rally, we got a sell. The sell is not going to nowhere, so it's simply stuck. There is no reason to fight. I would suggest get rid of that. The pair might make the straight continuation from here or slightly lower. And buy dips should be better idea in such case. If we get any drop down here or slightly lower back to the trend line, that could be a beautiful, that's the current zones we have, right? That would be the beautiful, should be a beautiful opportunity for this week. It's non-farm payroll week. Yen pairs during non-farm payrolls tend to be more bullish historically. It's not a rule of thumb, of course. This is definitely something to focus and to look at. So buy dips from my point of view is the smart thing. I would not be surprised to see new high. Next one on the list, Swiss yen. We wanted to go for sell as long as the last top holds, and we got a beautiful sell. We are approaching to the target of 38.2. This is the cash out here. So thumbs up for this pair and game over. The Swiss yen from here, from my point of view, is neutral. We managed to squeeze it beautifully. We were rallying 2 weeks ago all the way to 118. We got the 118. We turned bearish. We are reaching the 38.2 perfectly. We squeezed it to the top way it's possible. Alright, and before we go to the commodities, few more pairs that we wanted to see on the previous week. Aussie dollar, we were after the buy dips. Now, well, we got the dip, we got the buy. And now the question is what's next. The way I see that, it's triple with divergence, meaning it's making 1, 2. This should be the 2. From here, I think we should be able to see that pushing slightly higher. I would be looking at, as for now at least, still buy the dips. Invalidation is right here, the last low. Invalidation of the buy plan. And the next one was the New Zealand franc. We wanted to see one more rally before we are talking about sales again. The rally happens, and like we saw with the Aussie franc before, this would be the area where we would expect the sell off. So we mark the trend line, we go there, right? And once we manage to see the breakout, sell the rally would become the plan. The best levels to pay attention to the breakout. to the rally. Sorry, would be here, here, or here on one of the places. I personally think we are going to this area before the sells. We might even rally towards 261.8 before the sells, and of course there is still a good chance that 100 will hold stiff. So we should see. We must have reversal signs here, false breaks, lower lows to be created. So let's say if we get something like that and lower lows, then we can go and sell the rallies. And two new forex pairs that we have on the list: dollar Canadian, which was looking bullish on the previous week. I didn't cover it because it wasn't too much clear. This week, previous week, it was bullish, beautifully rallying until the moment it switched the pressure to the bearish divergence again. Now, what is currently happening is that the GDP came beautifully in Canada. The discussion between the new agreements are much better right now. So here we go. Triple cycle on the previous move down, which makes it leg number one. This is a range of the correction. This is very good chance for the next leg to be formed. And in that case, we are making the cycle. 61.8 is currently approaching, so and looks like breaking. If it managed to continue the momentum, from my point of view, the next magnet zone should be the area of 127 plus. Maybe it will drop to 125, where from I would expect further rally continuation. So dollar CAD, I want to see the short-term drops for long-term switch around with the buy plan. So basically right now, by ideal, we should see the sell the rallies plan. Short-term, of course. And a few new ones, that's the yen pairs. Dollar yen by itself, still aiming its bullish rally. It looks like it's building up the 100% duplication of both of the cycles. That's slightly above 114. I suspect we are going towards 114, 115 before we switch bearish again. So dollar yen, I would be looking to buy all the way here or slightly lower with the trend lines. Look for the rallies towards 114, more closer to 115. That's the two new opportunities as we have them on the list. And gold, our plan was bearish, sell the rallies. Gold was dramatically beautiful this week, and finally we got the drops we wanted to see. The biggest question, what's from here? The way it looks right now, it might be holding this possible low, making the second leg further towards 1220 up to 1240 before a possible further sell-off. For me right now, the gold is in a structure that is uncertain. And the reason is of this hold. So for me, gold for this week becomes neutral. My goal on the last 2 weeks was sell the rallies. This plan worked beautifully. Really uncertain right now. Silver, well, silver, where is that? Here. The idea was also get a rally. Now this idea failed for me because we got the rally here, we got the breakout, and it failed. This is a loss. And the question is what's next. My plan does not change here because the way I see that we are now in leg number 2 before the sell-off. So for silver, the way it looks right now, this is a first leg, this is a 2 waves correction. So that makes it triple double, 1, 2, and currently building up the second. So I would not be surprised if silver makes something like that. Pushing it slightly higher, making here some kind of bearish divergence and turn bearish. on the same time, it can easily go break and make the continuation. So nothing clear and obvious the way it looks right now on the silver, at least at this stage. I would not be surprised if short-term rallies wouldn't change that, at least as for now, for any longer terms. And the sugar, we wanted to go for buy dips. The plan remains the same. This is our invalidation. We would expect the sugar continue higher. That was the sugar plan. Okay, it still remains the same. And DAX, we are after sell. DAX was very sweet with us this week. We got the places we wanted to see. We got the second rally and that block here with a false break and divergence. Breakout sell begins. The way I see that, as long as this top holds, this is invalidation. We should be looking for sell the rallies. If invalidation is triggered, then we are going for a deeper rally of 1-2 before the next future sell. At this stage, it remains bearish. As per Nasdaq, we don't have anything yet. I want to see another false break here. It would be simply classical before the next sell off. Not there yet. And the cryptos. Well, here we go. Our plan was Ripple and Ripple versus the BIT. We got the drop. Bullish hidden divergence. We got the rally. For me, it's still the case. Here we go. Ripple here. We wanted to see the drop and the rally. Same with the Ripple versus the BIT. Okay, so for both, XRP, BIT, for both the plan still is bullish. I would expect some rallies. We might get any pullbacks, but for me it's still the case for looking for buys. And Ethereum versus the Bitcoin was our plan to continue to see the rallies. We wanted the partial cash out previous week due to the two waves and a breakout here. Longer run, this is our invalidation. We would expect further rally. So Ethereum versus the Bitcoin, I would expect this. And that's the two that we have for this this period. That's the two I see. Interesting. Now there's one more Litecoin which broke here, which broke the last high. It makes the structure of a triple here pretty early because I want to see double or a range before the buys, but definitely the way it looks, it's a bullish structure with this low as invalidation and the idea of looking for buys. So Litecoin is also in a very good position for the buys there. So that's all for this week. Previous week was very beautiful. This week there are several opportunities. Few of the pairs are now neutral and uncertain. Several others are perfect. Remember, it's never the quantity, it's the quality. It's enough to have. This is a very common mistake. Traders think I must have the more opportunity, the better, the more the better, right? It's totally wrong idea, assumption, and understanding. It's not about the quantity. It's enough to have one good opportunity or two good opportunities for the week where you have a full synchronization of your setups and trade it rather than have 20 possibilities and not having a focus on the best setup. Just try everything with a wish it will be fine. That's a huge mistake, and that's why I always suggest trade with the ones that have the synchronization between the time frames in the directions you want to trade. When you have that, that's the best you want to deal with. So that's all for now. I invite you, If you are not yet a member in the Traders Academy Club, I invite you to join us. The link to join is below. And enjoy our live trading rooms every single day. We have live trading rooms, trading reports and setups coming to your email every single day, giving you the best ideas as we see them to trade for the coming week. So the link to join our Traders Academy Club, if you would like, of course, is right there below the video in the description. I hope to see you there with us. Thank you very much for your time watching this video. Enjoy your rest of the Sunday and happy trading week. Remember, it's non-farm payroll, so patience, careful, and small risk trading. That's the best you can do. Thank you once again for watching. I'm Vladimir Ribakov from Traders Academy Club. See you.